Hello, everybody. My name is Jeff, and I am a day trader of equities and options in the U.S. markets. You can find me trading in the daytradewarrior.com chat room. I'm one of the moderators there. Additionally, I can be followed on Twitter and Instagram for my intraday trades and other ideas and things I'm looking at Income Traders. That's INCOMETRADERZ, and I'll put links down in the bottom of this video when I'm done. What I want to talk about today are bounce and reversal strategies. Bottom bounce and top reversal are two of my favorite strategies to trade. There are certain requirements that I have to have met before I take a trade based on a bottom bounce or top reversal. Some of those being, market direction, whether or not they've triggered an alert within my Trade Ideas Pro scanner. I rely heavily on my scanner to filter stocks that have just pulled back versus ones that are seriously due for a bounce. And by doing that, I've increased my probability of winning success trading bottom bounces and top reversals. And often I realize half to a full point, if not more, on a move, just trading these very simple strategies. And these strategies are called out in chat every day, and we make money from them every day. Same thing, rinse and repeat. So I have a couple charts up here from two that I played today. PII, which is Polaris, and CVST, which is Cubis Pharmaceuticals. First thing I want to show you here is my scanner for the bottom bounces and the top reversals. So we'll start with the bottom bounce first, here in the red. The scanner has been designed to identify stocks that are likely to produce a sizable bounce within a very short amount of time from the alert. So I've been working on this scanner for just about 2 years now, and I constantly tweak it to further help identify higher probability trades. If you will look here at 8:01 a.m. when we got the first alert on PII or Polaris, at the time it was trading just about 1.8% below the VWAP, and it had dropped $2.70 in the last 30 minutes. And that's what that's one of the first things I look for is there a good distance from the VWAP, and is the drop in the last 30 minutes sizable enough that I can make money. One of the things I do is evaluate my risk to reward, and I always look to make at least 2 to 1 minimum on any trade that I take. Why I like these strategies is because I can clearly identify a stop. Based on the filters in the scanner, it alerts stocks that are at low of day, and they have certain oversold conditions that have been met on volume with certain minimum price changes over a period of time. And at 8:01, PII was alerted. If we look at my chart here now, I use eSignal for charting, and I use the TAS indicators. TAS market profile indicators, and you will notice that my charts are quite colorful. It does take a little while to get used to, but ultimately it really helps in trading these types of strategies. And I also have your basic moving averages and VWAP. VWAP is very critical in bounce and reversal trades because it gives us some idea of where the price could potentially return to, drop down to if it's a short, or bounce up to if it's a long play. And so further from the VWAP, the more stretched the rubber band is, and the more momentum it could have on a reversal. So at 8:01, on the 1 minute over here to the bottom right, you will see that the stock is selling off candle under candle consistently here. So when an alert triggers, the first thing I do is pull up the chart. I look at the RSI, confirm it's oversold, and I look for potential range to VWAP. And in this case, at 8:01, the stock was trading just about $145. It continued to sell off, And how I identify an entry trigger is almost always using the 1 minute chart. I look for a break of the previous candle's high or the previous high candle. So if you notice all these candles are candle under candle, there's no new highs being made until we get down to here. Here's a little wick. Now this candle is quite big. This is the range on this candle is from 144.13 to 143.64. So it's about a 50-60 cents distance on this candle. This would be the last high candle, and we would use the high of this candle to be our long trigger. Now, the stock at this point hit low of day, which at that time was 143.64. Then it made another kind of bottoming candle here, and it started to move back up. Now, this did break the high of this little bottoming candle at 8:11. However, I waited until I got more confirmation of the bounce by the break of this candle. So I actually entered this trade at about 144.13.15 was my entry. And as soon as I got in, it didn't bounce right away. It took 1, 2, 3, 4, 5 minutes kind of trading sideways before it started its long move up. Now, why I like bounce and reversals again, because the risk reward is so easily identifiable. At this point in time, I knew my stop was going to be at low of day. So therefore, 143 at this time, 143.64 was my stop. So it was about 50 cents away. I took a small size on this trade because the stop was 50 cents away. It's a big stock, had larger than average spreads. And once the trade was triggered, it started trading sideways, came down on me a little bit, but it held the low, it never broke the low, and I was prepared to exit the trade with a loss at the stop if it didn't bounce. However, it did bounce. And on this candle, it started its leg up, and it ended up moving from my entry up almost 3 full points to the high right here. And I sold along the way at various intervals where the price action appeared to stall or slow down. Now, one of the good things about using TAS indicators with your charts is that it is very easy to identify trend exhaustion. Now, here we've established on the 1 minute solid uptrend for about 10 minutes or so, 15 minutes, and the 1 minute trend exhaustion candle is indicated here in the orange. Now, doesn't mean that it's going to reverse right there, but it's just the indicator telling you that that's a likely point of exhaustion of that trend and that it could come down from there. So look to exit the trade somewhere within this candle, because if you notice, in this case, it happened to be right. And what happened? The stock sold off all the way back to the lows again, so would have been a good short. But we played it long. We realized nearly 3 points on the trade. Definitely the biggest trade of the day, and it was a slow mover. You know, there's no having to flip out, in and out in seconds and worrying about slippage or anything like that. So what I do to stay in the trade is I'll take a size and I will trail my stop at the low of the 1 minute candles -1. So for example, as we move up through here, once we hit this candle at 8:19, my stop would have been the low of the previous candle -1. So 144.43 is the low. My stop was 144.42. And on a break of the low of this candle, it's considered a bearish signal, and it would have stopped me out of the trade. But it didn't break a new candle low for quite some time. Now right here, it came down and pierced it by 3 pennies. I hadn't moved my stop yet at that time. These little candles you have to be careful on because the price is so close. I often don't move my stop until there's some distance, just because when a new candle opens and the price hasn't changed much, simple spread changes can cause you to be stopped out. So I usually wait until there's at least 10 cents or so before adjusting my stop. And once again, continued up all the way through till we got this doji right here on the 1 minute. And the doji, as you probably know, is another sort of reversal indicator. By this time, I had sold kind of at the top of all these little peaks, and I was just trailing a few hundred shares, and ultimately I was stopped out at 145. The low of this candle right here was 145.86, and I believe my stop was at 145.79. And so when this orange candle came in, I was prepared to exit, knowing it would hit my stop, and it did, and it continued to sell off. But I was able to realize over 2 points on average through this trade. It was very slow mover, very easy to follow, and it was alerted from all my trades today actually came from my bounce or reversal strategy scanner. The TUP, I also traded a bounce on that for a point, and then right after the PII trade, I got into Rider, which is ticker R, and I played that for a bounce as well. Made a few hundred dollars on that for another half point or so, and so all day this scanner will throw out alerts. I've decided to make the scanner available for sale in the stock scanner store at daytradewarrior.com, and you can find the stock scanner. I'll attach the link at the bottom of this video as well. But you can see that it alerts trades all day. Now I don't obviously take every trade that gets alerted, and I pull up the charts and I'll screen, but I kind of have these these filters at the top here to help me identify which trades are more interesting, and as these alerts trigger, and it's not often, it's one every few minutes or so, I'll pull up the chart, take a look at it, and I'll look at the volume and the VWAP and the amount of money risk reward situation, and I'll determine whether or not to take it. And if I do, I'll alert it in chat, and also my target for entry and exit. One more trade I want to review was a top reversal or a short that I took at the end of the day on Cubis Pharmaceuticals, CBST. The first trigger for this came out at 12:20. Now the bounce scanner, or the top reversal scanner, works just the exact opposite of the bounce scanner. It identifies stocks that have ran up and are desperately due for a pullback. Remember, in life and the markets, nothing goes straight up and nothing goes straight down. Everything has to pull back at some point and consolidate before it makes another move in a different direction. The scanners just help me filter the thousands and thousands of stocks being traded for the ones with, like I said, the highest probability of successful reversal. In this case, it alerted at 12:20 on the 1 minute. That was here, and the stock had already been moving up quite significantly on some decent volume, but it came into oversold territory and was alerted at 12:20. And I watched the stock for the exact opposite entry trigger that I use on a bounce. I'd look for a break of the previous 1 minute candle low, and that's when I would enter my short position. I might wait for confirmation and let it run for a couple pennies, but usually when a bounce occurs, it tends to be fairly quick, and so I don't want to give it too much room to get away from me. Now, my stop on this, like the bounce scanner, was low of day. My stop on a reversal short is high of day. So up here, the high of day was 69.83. On a break of that, I know I would be out of the trade. The low of this candle is 69.70. That's only 13-cent risk. That is awesome, because I can take 1,000 shares or 2,000 shares, and I'm only risking 13 pennies a share on the trade. So $260, and the distance from VWAP at this point was, it was over $1. So to make potentially $2,000, I will risk $260 every day. That's almost a 10-to-1 reward to risk ratio. So once it broke, and not only that, the TAS indicator that I use with my e-signal chart threw up an orange candle, which also shows trend exhaustion. We're getting pink exhaustion bars down here on the TAS navigator, showing that the buying momentum is falling off and sellers are struggling to gain control. There's profit taking in sellers and short sellers. So this looked like a good setup. Now it happened pretty quickly. Once it failed to sustain a new high on this candle, it started coming down. I got in this trade. The low was 69.70. By the time I got in the trade, it was 69.65 because it did fall rather quickly. And then I sold at the bottom of this spike here a quarter of my size at about 69.46 or 7 or so. Now, normally when I sell a part of my position, I will adjust my stop to break even because I don't want to take any kind of loss on a trade that I'm up on. So in this situation, I didn't, however, because when it bounced, it came back up, but it was still showing red dots here over the green bars, which showed that the sellers were still in control at this time. And it failed to bounce to the highs. It came within 10 cents of it. It did go 7 cents past my entry, but it was such a tight range at the top, I really wasn't too concerned about it. As the trade went on, it ended up not being able to make those new highs, lower highs, and then once again, candle under candle here, a new reversal indicator showed up, and as you can see, the stock drifted off all the way down to a low of about 68.96 or so, which is just about 3/4, almost a full point, about 3/4 of a point from our entry way back up here. And on this trade, I waited until I got past my first sell point, and then I put in a stop right around 69.51. 69.50 is a mental resistance level or support level, depending on your direction. And so a break of that. Once we got some downward confirmation, I just continued trailing the stop on my remaining size, moving it up every time a new candle opened. I moved to the previous candle high, and I didn't exit the trade until 69.12 with the rest of my size. So I ended up realizing 70 cents, 60 something cents on the trade, and that is how the reversal on CBST went. Now, this was one of probably about 7-8 trades I took today, all of which were profitable except for 2. And because I'm able to identify my stop and my risk so easily using the strategy, they were very minimal. Both losses were under $150 each. And when you're making, 5 to, I think my big winner was $1,100 on a trade on PII. When you're $500 to $1,100 on your winners, you can take $100 loss here and there and not worry too much about it. One of the things to be careful of is not to overtrade, because not every bounce and every reversal is going to work. And so when you have your profit for the day, you can keep trading. Maybe it's best if you don't, but you don't want to take the same size and risk giving up your profits. Live to fight another day.